Good morning, welcome to Trade Live with IG with Sir Christopher Beecham and myself, Rich McDonald. It's Monday the 15th of December.
It is. It's getting ever closer.
What's getting closer?
I don't know. Stuff.
Our holidays.
Other stuff, yeah.
So, Sir Christopher Beecham decided not to come to the marketing Christmas party last week where we were singing karaoke. So we're going to have Chris Beecham singing karaoke this morning. Everybody tune in for that one.
Can you imagine?
After 8 a.m.
Yeah.
What else is coming up on today's show then, people? I hope you had a wonderful weekend, and certainly calmer than mine was, talking about Christmas parties. So this morning we have myself and Beachy through till 8:10 when you get Guess the Chart. And then Angeline's doing a quick leap in here for 8:15.
There you go.
And Trader Friends is going to be with you then through till 8:30, at which point Rudolph the Red-Nosed Reindeer will be in here doing his Trade of the Week at 8:30. And that takes us through to 9 a.m. when Garth McKenzie joins me for a little bit of a trading chat.
There we go. I think he's rounding off the year with Trade of the Week, I think, because obviously it's a bit of a write-off the next 2 weeks, isn't it? Next 2 or 3 weeks.
So last week's was the last one. Is this a kind of?
This is just kind of the wash-up. Yes, because
it's a lap of honour, isn't it?
It is really, because I think he's done really well. Another double-digit return, so 20% or so, I think it is.
19 point.
19 point something.
That was at Brevin. We were up, I think, 19.9 going into the last week, and it was like, right, come on, it's got to be 20. It's got to be 20.
And did you make it?
So we made it just over the line. Just a nice little. What would that have been? $4 billion. It's
a wonder how you manage, really, isn't it? How was your weekend then?
Still didn't get paid.
No.
It was a eventful weekend.
Ah.
Yeah. Very enjoyable. It's good. Bit of exercise. Bit of. Then it was our lads' Christmas party. This was our 20th year of lads' Christmas party.
Gosh.
We
they get earlier and earlier in the evening?
What's that, sorry?
They get earlier and earlier every evening because you get older and older.
They actually do, you know. That's funny. I hadn't thought about that, but we 2005 we started at TGI Fridays for our Christmas dinner, and then we went out in the West End. And this year it was the Big Easy.
Oh,
so we were at the Big Easy. Mm-hmm. Pretended it was my friend's birthday, got them to sing Happy Birthday to him, and then went on to bit of not as much dancing, and I did a Cinderella. I was home by midnight.
Oh, because you turned into a pumpkin afterwards.
What about yourself?
We bought the Christmas tree.
Bit late, isn't it?
But we can never manage to make it stay alive longer, about the 28th of December.
Right.
So by the 29th, it's just turned into this dry stick in the corner. So we do late. I don't think you should get it too early. I'd probably get it later than even that, but yeah, that's just a personal thing. But yeah, we had breakfast with Father Christmas for the youngest one on Saturday morning, and then got the tree, decorated the tree.
The youngest one being 21?
Yeah. It's not allowed to sit on the knee anymore. No, he loved it. He's 6 in 2 weeks' time. Thank you, Gallery. 6 in 2 weeks' time. And I think it's the first time he's really got excited about Christmas properly, actually. Last year he was beginning to get excited, but this year's really taken to it like a duck to water. So.
And he's in that beautiful sort of window of being able to appreciate it and still believing.
Yes, exactly. Whereas the 15-year-olds are kind of... Exactly. The 15-year-olds are kind of,
yeah,
I don't get anything for Christmas anymore.
Well, they'll be going out to get drunk on Christmas Eve, won't they?
Bloody not me.
Oh, we got Beachy to swear. This is a cracking morning.
Gonna have it eventually.
Let's go. Right, overnight action. Let's see what happened on Friday. Ooh, what a mess. A mess indeed it was.
A bit of a messy end to the week, wasn't it? Because you had Thursday, we had Wednesday, and obviously Oracle spoiled the party, and then Thursday, I think nobody cares about Oracle, and it went up again. We thought, oh, we're fine now. Feds cut rates, Santa rally, blah, 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 and then no. Friday was quite the nasty move, wasn't it?
Broadcom was not meant to do this to us.
No.
Broadcom was the hope, the leader. Boom.
Everything else with it, really.
Down 11.5%. Oracle down 5. AMD down 5. Intel down 4. Nvidia down 2.5.
And of course, if you looked at the Dow, it was much less badly affected because of its low weighting. So it feels like this was, again, the much vaunted rotation. And people were just taking out everything
Nope. Stay up.
that was tech-related and buying non-tech, because there you are.
There we go. Citigroup up 5. GE up 4. Tesla even up 3.3. That was the real kind of standout, wasn't it? 460.
It's such a bad performance from the Mag 7 this year, and arguably whether it should even be in the Mag 7 anymore.
Yeah.
Broadcom has trounced. Broadcom has trounced everyone in the Mag 7, apart, and is even 10 percentage points ahead of Alphabet is the one. It's sorry, I can't get my words out. But yeah, it's if anything is Mag, it's Broadcom.
The thing that really jumps out to me on that is Eli Lilly. Of course, Eli Lilly was languishing around the 750 to 800 mark. Because I remember having call options on these that were going to expire in October. And suddenly, since the 1st of November, this thing's moved up 25%. Now, that is real rotation, isn't it?
Yeah, it's proper sort of changing around, which is a healthy movement, I think, if you want to see the market continue. It can't just be tech. Even the biggest tech fans would say that. And I think it's the fact that you're seeing this sort of shift. And you can argue why, and Oracle and Broadcom have spooked everybody because of the earnings reports. But it's the kind of thing you need to see. And US small caps have done really well, haven't they? If you look at the Russell, someone's lit a rocket under that for a change, and they've
So that was all-time highs on Thursday, but I think it did pull back a little bit on.
Yeah, it also got smacked a bit, but then it's sort of small caps. But yes, and that's a breakout as well, isn't it, for the Russell? So that is rotation, proper rotation.
Yeah. Now, that was the story of the Nasdaq, but of course, Asia affected by those tech moves as well. So you've seen some weakness in Asia overnight, down 1.3 in Japan, similar in Hong Kong. South Korea was even worse. South Korea down 1.8. So yeah,
it feels like a bit of a tech rout, doesn't it? And then Japan banks did very well the last couple of weeks because of the expectations that they're going to hike rates this week, of course. So while it is the last week of the year, it's also quite busy. Everything seems to be don't entirely write the week off, has to be said.
If only we had somebody that did.
Yeah, if only we did have somebody
like a
really good,
what to look for.
Really good summary week. Who does that? Who does that around here?
Is there an email that goes out on a Sunday?
There is an email that goes at 6 o'clock on a Sunday.
Chris Beecham's insight. Go on, tell me that's not written by AI.
I swear that used to be. No, it definitely isn't. I promise you that isn't. Chris Beecham's. I swear there used to be a possessive apostrophe there, but there we go.
Possessive apostrophe.
Yes, because you have trumpet fanfare, please. You've got the Bank of England. That's the worst fanfare I've heard. Idiot. Bank of England cutting rates, European Central Bank holding rates, and the Bank of Japan, which doesn't get a hyperlink for some reason. I don't know what they've done to annoy the web editors. Is going to hike rates. So there we go. See, the Fed gets one as well, but the Bank of Japan doesn't.
Yeah, it tells us exactly the situation we're in, doesn't it? We're getting lower rates in the US, lower rates in England, ECB.
But not in Scotland.
Sorry, yes. Jeez. Well, Bank of Scotland.
How are those kilts? Did you buy any kilts, any Scottish government bonds yet? Have you bought any of those?
Is that a thing?
Yeah.
There's Scottish government bonds.
Did you miss this? I don't think they've started selling them yet.
Oh dear.
They're calling them kilts. Did you remember? I think we discussed this.
Very clever. I would not buy any kilts now. I mean, now that we're at the World Cup, then better for the nation. The economy could be thriving next summer.
There you go.
Because of course the economy is the pubs.
Yeah.
So
you can say that. I can't.
Right. Let's go back onto that. Yeah. So we're getting rate cuts. Europe is now in its trough. European Central Bank rates at their lowest they're going to get, but Bank of Japan increasing. So this is starting to put a few tremors through the rates market, isn't it?
A bit of divergence between these various central banks is quite interesting, isn't it, really? That it's not all moving in lockstep, really. So.
Nike reporting this week, and along with Micron.
Yeah. So it's not quite an empty week. In fact, it does feel a lot busier than you'd expect for the middle of December. And you get flash PMIs tomorrow as well. The round of them start overnight. UK employment figures, German ZEW. It is actually quite busy.
And that's
and of course payrolls.
Right, payrolls. So listen up, everybody, because this is important. Otherwise, you are going to be looking at a blank screen tomorrow morning. Tomorrow, we are switching things up. We are bringing you live coverage of the non-farm payrolls from 1:28 p.m. Myself and Piers Buckworth are going to be here to give you live reaction to as those non-farm payrolls hit the tape. Then we're going to be doing our normal segment of single stock updates and Piers' thoughts. Then we're going to be taking a look at some of the worst analyst calls of the year. This was Piers sometimes mentions this on his TikTok. He loves a bit of a rant about an analyst. So we're going to be looking at whether these research targets actually mean anything. And then we're going to do a live US Open. So hopefully there'll be a few things to trade around that Open.
The excitement.
So join us, 1:28 p.m. tomorrow through till about 2:45 or when we've made some money. But no show in the morning, right? So that's the important one.
Yeah, the gallery gets to sleep in as well, I suppose.
Yeah, he needs it. Phil's got 2 Christmas parties this week.
Has he? I didn't know he was that popular. Which Christmas parties is he going to?
Yeah, someone else's. Strange, isn't it? Was Angelina in good form on Friday? Because I noticed her having a few drinks on Thursday night.
I didn't see her Friday because I did fast markets with Luke, so I presume she was sitting in a darkened corner with a towel over her head. I don't know.
She was singing Angels about 9:30 p.m. in the karaoke.
You see, I'm so disappointed to have missed it.
You didn't. You weren't there, no?
No.
How come?
Because I'd rather not.
Are you part of marketing?
I've never, ever done karaoke in my life. I'm not about to start now.
What would be...
I don't want to watch people sing badly. I don't know. I couldn't.
Yeah.
Thanks, Gallery.
So, right, back to it then.
So, sorry.
NFPs are expecting, it says 10,000 here,
but 10,000 is the figure I took off Trading Economics, so you can check that.
I thought it was a bit higher than that, maybe about 40 or 50.
This is November's payrolls. Does anybody really... I can't say does anybody care because you're doing a live show around it, so obviously you should care because it is important.
Well, I think it could be negative. I actually think this one...
How do you think the market reacts if you get a negative...
how does it react?
If you get negative?
It depends how negative it is, and it depends what the unemployment rate is. So forecast 4.6% unemployment. If that comes in at 4.7 and it's a negative number, I think we go down, because I think you've got to start, because the rotation has now been out of tech into the real economy, and the real economy is then proved to be slow.
I'm going to take issue with your phrase, the real economy, but anyway, let's carry on for now.
Even though, 40% of GDP growth is from tech.
Which one is the real economy, anyway?
It's true. Well, the one where people work. The one that 99% of the population work in, I'd call that the real economy.
Right, okay.
And not just because they don't pay tax in international waters. And so all their numbers are higher because they don't pay tax to any other governments.
Anyway. Carol, the week ahead.
Wednesday, you've got UK inflation, German IFO. Thursday, that's the big day, isn't it?
Yeah, busy day. Because the US inflation as well. It's really all action-packed, actually, for this week. So US inflation expected. Are we expecting inflation anyway? I think it's still the forecast because, of course, it's still slightly mucked up because of the shutdown. The Bank of England to cut 25 basis points to some belated good news for a beleaguered government. Of course, after the budget, because that still continues to rumble already, because you had negative GDP for the UK on Friday, didn't you? Just not good.
Not good at all. Japanese inflation comes out at 11:30 p.m, so that will give you some idea, I would imagine, nailing the BOJ rate decision. So if you're going out on Thursday night, you may as well stay up, because 3 a.m. is going to be hugely important to, not just this week's market, but potentially going forward if we.
As we cross into the new year, yeah, it's just with the BOJ sort of on hiking watch. Who else joins them next year? Don't forget, a few of the Fed, of course, expected to hike rates next year, which was interesting. So that's going to be something to keep an eye on.
And then W.H. Smith on Friday is going to be interesting. There's a weekend piece in the Sunday Times about this. Quite an extensive piece, actually, saying they desperately need a new CEO to come in and show them the way forward.
Really? I thought they were doing all right now they'd spun off the high street bit.
W.H. Smith, no, the accounting.
Oh, the accounting stuff.
Thing, yeah.
Oh, yeah, of course, sorry.
Only down 40%.
Only done the honest whack to the share price. They just make loads of money off the airlines, or the airport concessions.
Yeah, but they were, the great hope was 800 new stores opening in the US.
Yeah.
In their travel areas, and that's all now put into question because they actually don't know whether the US can make money or not, because it was all in accounting.
Made up. Fake news.
Yeah, fake news. Then we've got Nike on Thursday. Did not know that was out on Thursday night, actually.
That's what it says, so I put it in. What I could see. I think it was.
No, we last heard from Nike less than 3 months ago.
It's like my homework marked in real time with you sometimes. I will check the Nike one.
Yes, we'll check that for fake news as well. And then dividends, what is going to pay for your Christmas presents? It is United Utilities and Games Workshop, along with Halma. What does Halma do? Don't know Halma. They changed their name from something else.
Boss. I know they've increased their dividend every year, I will tell you that much. They are life-saving technology, based not far from me in Amersham, actually. Interesting enough.
Lovely. Good stuff. Right. Shall we take a look at the newspapers, Mr. Beecham? We've got somebody from Trustpilot sitting on the desk. That's not the right place to sit when you're at work, is it?
Just shows you're an exciting, go-getting CEO, not traditional enough to sit on chairs and be boring. So I've
And his dirty feet on the desk as well. I'm not happy about that. No wonder the stock's going down. Somebody tell him.
Or is that the guy? No, that's Grizzly Research. That's a good name, isn't it?
Yeah, Grizzly Research. They've made 1.5 million.
Then cashed out when the share price. I love it how it's always that linger around short sellers, as if there's some kind of bunch of spivs rather than actual sensible research saying the company's overvalued.
Talk about the telephone box in there as well.
Just tick the boxes for a tedious tech office, really. Isn't it?
Yeah, it really is, isn't it? And then, so there's the piece on W.H. Smith recovery will be a marathon, not a sprint. Is that a nod to Snickers? Or that's what it should have been.
I think you're overthinking that. I think
W.H. Smith recovery will be a Snickers, not a sprint. See if anybody got it.
No, not in the time. If you have to explain it, it's too hard.
But yeah, not any bit. Oh dear, that rings a bell. So I've actually been in this situation before. I tried to reverse into a parking space up a ski resort in New Zealand and ended up in that situation. We'll get a picture up for after the break because it's highly embarrassing and it was entirely my own fault. We were lucky the car didn't topple actually. But yeah, we'll come back to that one.
What else is in the news?
Yeah, it is
a slightly slow news day. Well, it is.
No, I mean, that's just such a sad story in Australia. I don't think we can even talk about that because that is just horrific. Bitcoin and then stablecoin, just not much in the FT at all, really.
I'm sure they'll be delighted with you telling them that after producing the paper for the morning. But obviously, so if you look at the market section, silver above $60 for the first time on global supply squeeze. That was the big story in the markets. And still this warning from Trafigura last week saying a super glut of oil, which really walloped prices last week. They did come back. Did they come back? No, they didn't come back Friday. A little bit overnight, but briefly touching the lowest levels back down to briefly below $57 a barrel last week on WTI.
I don't know what to do with oil just now. The answer being nothing, but it looks ugly, but there's no way I'm going to short it. So
why?
Yeah, to be fair, with that trend,
in the conversation we had this morning about sometimes you have to just not overthink it and just do the obvious. I think, yeah, there's a sense of, is this bearishness reaching a peak? And does that therefore mean if you only need a slight tweak of the numbers, does that start to see a recovery in oil prices? But admittedly, there is very little sign on that in the price action, does it?
But it is right around that level where it's break even for those names in the US, the shale names. So you've got in theory, you've got a base there at say 50.
Yeah.
That's still 15% lower it could go, I guess.
Yeah, exactly. It just looks uglier and uglier on the weekly chart.
A very weak non-farm payroll number could actually send us lower.
That's a good idea. That's a good possibility.
Yeah. So maybe a daily put option tomorrow, because the vol won't sit in oil, will it? The vol will sit in the, elsewhere. Right, it is 7:51. Before we look at the upgrades and downgrades, then let's take a quick 2-minute break. I'll get up my most embarrassing picture, and we'll...
Surely it's not your most embarrassing picture.
It's pretty close. This was pretty embarrassing. But then, yeah, really quick. Oh, sorry, you are right. Nike is Thursday.
Thank you. I don't make this stuff up, you know. I know it seems like I do. But...
Here's a real quick cheat sheet there. So US Empire Manufacturing is today. You've got Lanai, the house builder. Then the TikTok sale deadline. Didn't realise that was tomorrow. You've got FOM speakers on Wednesday, Waller and Williams. And
a bad comedy duo.
Yeah, FedEx as well on Thursday. Now looking. So the takeaway for, I think this is from Goldman's, the market rotation broadens beyond mega cap AI. You've got elevated single stock vol versus stable index vol. So the constituents are moving in a volatile way, but the index is hardly moving. And watch out for re-rating chances in IT services and the apps and internet turnarounds. And does the NFP and central bank outcomes trigger a late December vol shift? We'll leave you with that question as we take a quick 2 minutes. We'll see you for the London Stock Exchange Open shortly. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris C.J. Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. Every Monday I break down a carefully selected trade setup live in my Trade of the Week. Whether you're new to trading or have years of experience, Trade of the Week will help you to generate powerful trade ideas and execute them with precision using stop losses and profit targets. So if you're looking to enhance your skills and boost your confidence in the markets, join me every Monday for my Trade of the Week live on Trade Live with IG.
Hello, welcome back to our countdown to the opening bell. We are minutes away from the market open on this, the 15th of December. Rich is still frantically searching his phone.
I might have deleted the picture because it was such
Promises,
a
over-promise,
memory.
under-deliver. There's a theme emerging here, I think, really. Not like what you get with Trade of the Week, of course, but that's another matter. So what are we expecting? No, he's still going. Okay. What is... FTSE to open at 96.93 according to this, so again up slightly from where we were on Friday's close. Slightly more positive atmosphere enveloping European markets this morning.
Diageo started to rally last week, so I'm going to be watching that on the open. Very happy to see it up at 16.64, managing to get in there at £16, Chris Beecham.
16 whole pounds.
Will we see it ever below £16 again?
No, it could be the bargain of the century if you're brave enough to stand in front of that train.
But we're close. I was a year off.
Oh,
It was 2020, not when you were all locked in your homes. I was up skiing, trying to crash my car into a mountain.
there we go. Still hope yet, I suppose, at some point. Might make it. DAX opening at 24,320. That's going to be a nice change from where we were because that's a decent bounce on that index from the lows about almost a month ago now. We were about 1,400 points lower than we are now. So that was a big area of support. But the problem is for this index, every time we get up to about here, we come off again. So this is interesting to watch as the week ends. And somebody's saying in the chat, do we think the FTSE can make that 3.2% jump to reach 10,000 by the end of the year? I suspect it's probably a bit too far. Let's be honest.
Or if it is, it's going to be in the 31st of December.
Yeah, exactly. Just
get marked up 80 bits.
Looking. So yeah, I suspect I wouldn't be surprised if we see it early on next year, 10,000. I think people come in fairly positive, and then we'll see what it does before then.
Interesting. Right, how close are we? We're 4 seconds away. Go on, ring that bell, Chris Beecham. Very disappointed I can't find that picture. Let's have a look at how the early risers.
There's no surprise there, is it?
Scottish Mortgage Investment Trust, did the Nasdaq not continue to sell off? Or they own some of SpaceX, don't they?
Oh, did they?
I think Scottish Mortgage Investment Trust owns some of SpaceX, so that's starting to get very exciting.
It's not the investment trust, which is a boring name.
Yes.
It's doing some of the most exciting stuff.
Remind us why that would be good news if they own some of SpaceX. Chris.
Because SpaceX planning to IPO next year. I think CNBC was saying that 800 billion IPO, which is down a little bit from where we were last week. I think it was 1.5 trillion.
Well, it sounds a little bit low to me.
Bouncing around.
On the IG platform, you can actually speculate where SpaceX will be on the close of play on day one of its IPO. And it sounds like that's getting closer. So we'll take a look at that after we've done the rest of these moves, because there are some quite big moves in the FTSE here.
Yeah, for Expo, obviously I think that must be the Ukraine news. That Ukraine is apparently dropping its demand for NATO membership as part of this crab-like progress towards some kind of deal. That's interesting.
Mining stocks, Rios and Glencore up 1%.
But storming away, and top three this morning is Fresnillo, the best performer on the FTSE 100 this year. Absolutely bonkers year for Fresnillo.
Is it the top one of the year?
It still was, yeah, when I checked on Friday. So an absolute rocket,
Then
unsurprisingly.
We got ABF down 1%. That is across Primark, St James's Place, and Reckitt's also down 1%. And the rest, not too much to talk about, really.
No, it's a day of sparse RNS. I didn't really spot anything particularly weighty this morning in terms of news.
Would you like to know your big European movers, Chris?
I'd be delighted.
Deutsche Bank, BNP Paribas on the upside. SocGen is up there as well. So it's the European banks. And then we've got Stellantis up 1, still around that just over the 10 euros mark. Total Energies up 1%. Looks like you could do with a bit of heating fuel.
It's cold. It's your fan in the corner. Every time it turns on, I get a little blast of cold air.
Well, it's good. They got to be there to support me. Come on, Rich. Come on.
Just the one, though. Hey.
That's all it needs.
LVMH up a little bit this morning. Must be some pre-Christmas champagne buying going on there, maybe.
Right, what is popping to the downside? Rheinmetall, 1,600 euros.
How did they do last week? They had a good week, didn't they? Last week?
It was decent. Decent week. And then Philips, small lower as well. So not really any big moves. Adidas, watch out for a big move on Friday, of course, on the back of the Nike numbers there. I think they'll be losing share, though, so that'll be an interesting one. If Nike have run into these results, $67. And at 67, they're going to have a decent, better than the conference call last time. But I think if they're winners and Adidas moves higher on that, then I'll be looking to knock some of those out.
Seems to be the way it goes, isn't it?
Yeah. Silver,
another 2%. That's back. That's not new highs, because of course we did get 60, 64, 60.
Hugely volatile day.
Week.
Piers messaged me at about 11 o'clock saying, "Hey mate, it's time to short silver, isn't it? It's time to short silver." I was like, it's a dangerous game. I wouldn't do that. And if we just want to go to the GIP here, you'll see he was actually spot on. To give it to him,
he was right for a while.
He was right for that. Yeah, 1 hour
window.
period. But it did go down 5% in that time. Jeez.
And that's what you have to understand, isn't it, with silver? When it goes, it goes. And you have to be on a daily chart that looks like nothing, but obviously that is a nasty kind of move. If say you bought it last week, you were late to the party, it's come roaring back again. So there's clearly a lot of demand to push this one.
Right,
very good gallery. Yeah, stairs up, but the lift down. Yes.
Where do you find SpaceX then on the platform? You go to Discover, and Discover under IPOs, it is there. So you get not only SpaceX, but you also get Revolut and OpenAI as well. And remarkably, OpenAI has not budged. I am dying to short this thing, but I do not understand. It's gone up since Sam Altman had his horrific podcast.
Oh, since We're Going to Need Money.
Yeah. Now, smart people in the market think this has probably come off 30%. You know, its perceived value has come off 30% since, and yet it's still up there. So I'm going to do it. Let's see.
Of course, it's the price on the end of the first day of trading, isn't it?
End of the first day of trading. I don't think this thing will ever come to market, but I do think that the perceived value might fall in the meantime. So let me just check if is that £10? So there's the daily. Look at that, right? So from the 29th of October, it's gone up from 890 to where it is today. That's wrong. There's no way that OpenAI is trading at its high.
It's just wrong. Well, you should.
Well, either that's wrong or Oracle's wrong. The problem is you can't do an Oracle OpenAI pair trade because this one might not come to market.
You best get the desk in. Give them a good grilling.
Right, so one contract's £10 a point. This is the first time I've ever done one of these, actually. To do £10 a point?
Sounds sensible.
OpenAI is not about to double, is it? Could do.
Could do.
Not quite sure how, but let's start with one and just make sure that I'm doing it right. So there we go. This order takes you over the maximum size for this market. That's why it's still high value. Right, look, Moore, my PCM. Let's get on this.
Get an angry phone call now.
Yeah.
Disgusted.
Not having this.
South Kensington.
Why is our OpenAI IPO market not working, please? Anyway, SpaceX is the one we were talking about. Look at how much it has gone up in the last week. This is why you should play these IPO markets if you are got a feeling about it, because 850, it's gone up 45% in the last week.
That's a bit mad, isn't it?
That's incredible. So that's why you're getting repricing of things. I wonder if it's done enough yet. So we go Scottish Mortgage Investments. Let's see what Scottish Mortgage Investment Trust have got. Yeah, they own 8%.
Wow.
Has this actually gone up, or is this a trading opportunity?
They own 8% of SpaceX. Wow. That's mad.
Or is it 8% of their portfolio?
Yeah. Surely it's 8% of the portfolio.
Is that what that means?
I think that must be, yeah, space. Is that what SpaceX stands for then? That shows my ignorance, isn't it?
Quite clever, actually, isn't it, the way they do it? Yeah, that's a really nice... But yeah, so if they've 8% of their fund, 8% of the trust is in SpaceX.
Wow.
TSMC, it's done all right, hasn't it?
Yeah.
Mercado Libre has done incredible.
Has it? I haven't followed it at all.
The South American Amazon.
Oh, the South American Amazon. Okay.
Then Amazon. ByteDance has probably not done great because of the whole TikTok debacle. Meta not done great recently. Shopify hasn't done well, has it?
No, I don't think so.
But yeah, if we look in the last week, Scottish Mortgage Trust, if that's 8%, 8%'s gone up 40%. So you should have at least seen Scottish Mortgage Trust gone up 3%. And it has. Yeah, there we go. So we're not ahead of anything here. It's gone up. It's gone up about 6%.
Wow.
There we go.
Not bad, is it? It's not bad at all for them.
Yeah. Good. Right. It is 8:10 in this beautiful morning. If I find my picture while we're outside, I'll get Phil to put it up for you and Ange to have a laugh.
Yeah.
Yeah, and we'll see you back. So I'm with Garth McKenzie in about 15 minutes time. And then, of course, that comes after Axel's review of the trade of the year.
Trades of the year. Trade of the week.
Trades of the year.
Trade of the year. Yes.
We'll see you in 2 minutes with your trader friends.
Wake up to the chime of a Christmas start, jingle in my soul, fire in my heart. Cocoa's warm, the charts align. Winter's awake, and it's our time. Rich with the grin and chums along, feels like the place where we all belong. Moments of laughter, the market spin, decked out screens as we dive right in. Every turn, every chance, step into that Yuletide dance. The numbers rise, the bells will play. Together we shine today. We're dancing through the winter rain, feeling that cheer again. The rhythm moves, the crowd will sway. We're chasing the snow-lit day. Oh, we're guessing the chart. We're playing our part. It's a Christmas day. Fills at the board with a festive cue. Dom's on the deck with the perfect view. Axel's got fire, Pierre's got the spin. The market hums as the lights rush in. We've got the crowd, the stream, the spark, that cozy glow before it's dark. It's not advice, just Christmas tune that keeps us moving past the moon. Every beat, every start, warmth awakens every heart. The world turns gold and we can't deny we shine beneath December sky. We're dancing through the winter rain, feeling that cheer again. The rhythm moves, the crowd will sway. We're chasing the snow bright day. Oh, we're guessing the chart. We're playing our part. It's a Christmas day. Hands up high, let spirits rise. Stars reflect in trader eyes. When the bells ring out and the screens glow bright, we rise with trade live with our G tonight. We're dancing through the winter rain, feeling that cheer again. The rhythm moves, the crowd will sway. We're chasing the snow-lit day. Oh, we're guessing the chart. We're playing our part. It's a Christmas day.
Hello, hello, welcome. Good guessing. Lots of people on the chat there. Boston Frank, Jesse as well, coming to the fore with Diageo. What did Boston Frank say? No, that was Bitcoin Ether.
No, it's a song.
Yeah, Pilatus coming in with Coda Cadal. I was going, what is good? Wow, there you go. Pilatus got it.
Never heard of it.
Told you it wasn't helium at the bottom, but I guess then we
You
were
did not say
thinking
it wasn't
helium 1.
helium. You said it might be helium.
I said it might be, but I said I don't trade something that is of that, that chart is painful. Caudal Minerals, yes.
For value in that share price.
Yeah, I think the CEO also won the award for worst framed, not on our end, by the way, on their end, because we had to do a Zoom interview in the end, didn't we? But the framing was a bit interesting, shall we say? How are you?
Fine, thank you. I'm fine.
So lots to get across here. I just want to quickly check copper whilst we're at it, because copper has had that move sharply low on Friday, but it has started looking like it is coming back to the fore again. Those of you watching this, you would have heard me 3 months before Finamize, actually. Finamize, yes.
Don't bang the table, it really annoys the gallery. I know that because I do it myself.
3 months before Finamize actually came out with an article, because they, I don't know whether you saw on Friday, they published an article on the weekend talking about silver and copper. Of course, we've been harping on and talking about this trade since the summer. And copper, taking a look at this, is starting to march back up again. This is the 5-minute chart. It's found a base. A longer term, of course, it's higher, but the fundamentals remain. Fundamentals remain that I just checked this number, and copper is still very much in a tight supply scenario. And Citi has also come out with a line on copper, saying they expect the US to hoard global copper inventory and draw further on depleted ex-US stock, adding that prices may hit $13,000 per ton.
This is a good chart from, I saw Glencore on my screen that they have from last year. So this, I mean, you might say this, Glencore would say this anyway because they're Glencore, but the huge supply gap really in terms of what the globe needs for copper and what it's actually getting and what that likely means. This is from last year's Capital Markets Day, but I think the point about lacking supply is still very relevant. Of course, the opposite of what's going on with oil prices at the moment anyway. So.
And Citi is actually late to the game, trader friends, because you saw me talk about this 3 weeks ago, pointing out UBS's outlook, which actually Citi has, could be accused of copying their target, but UBS has said earlier than Citi that copper will hit 13,000 by 2026, and this lovely infographic here has it's a lovely picture of why, and it's to do with renewables and obviously this supply squeeze. So, how was your weekend?
It was nice. We picked up our Christmas tree. Sitting there, hoping that it stays alive until after Christmas.
Your Christmas tree, have you got a theme or every year you've got? Oh.
No. Do you have a theme?
It's gold this year, a bit like Karing's shares. So let's have a look at Karing.
You call that a handbrake turn rather than a segue. But anyway, let's do Karing.
Take a look at that. This is what I was outside busy looking at when producer Phil came out and went, Ange, is your mic and your IFP turned on? Look at that, up more than 3.7%.
And what's that doing?
So Karing, let's just have a quick look. It is one of those that has been beaten down quite a bit recently. However, there's all this chatter, which I'm sure you're aware of, that we could start seeing Chinese demand come back, and many of the consumer names that have been beaten down, that are exposed to China, are starting to have the same mood music as well. There's no official line just yet. But I'm wondering whether this is down to all of that. We've got Andrew McKilby also coming to the fore.
What about that 5-year chart on Karing, of course, because it's not pretty.
It is not pretty at all, and so
is that the low? Was that the low from earlier this year?
Well, you can see on Andrew's golden line there, where I thought maybe the low was there, but it dipped even further.
Spoiler alert, it wasn't.
No, thank God I didn't go in then. But seriously, if you look at all the other luxury drinks makers, your tobacco stocks, you'll see many of them saying that perhaps Chinese demand is has been dire for so long that it can't. It's bottoming out now.
Yeah. And what you like about that chart, of course, is the fact that you had that rally. It's a new higher high, and when it pulled back over the last couple of weeks, it stayed above that high from earlier in the year. So that is the kind of constructive price action you want to see. I think it's not definite that it's in, and obviously it's been an absolutely stonking collapse over 4 years. But maybe there is reason to be more optimistic now at that point.
And as Chris was talking about that, I put that yellow line there because Andrew's safer but later is I like getting in when it breaks above all the EMAs there. At the moment, it hasn't quite done that yet.
No, but it's going in that way.
Yeah, it's looking promising. It's looking promising.
Point about trying to call turns is always dangerous in markets. You can get it right, but often you're waiting. So say if you missed the bounce from May, you had a decent pullback the last couple of months, actually, so it's a weekly chart, and it seems to have started to recover. So that's, you missed the opening bounce, but maybe if there's 2 or 3 years in this, you can look towards the longer term rally.
And what's also really cool is you can use the IG platform to give yourself reminders. So you can see one that I've put in before, and actually it has kind of come true. It says here, watching 150 for potential entry, change of mind before 200. So, this just gives you that discipline that you really need when trading. And I found that if I ever had to pick any worse and trades ever, it would be ones that were done, in an airport lounge, waiting to board a train. Yeah, those sort of things. Put notes for yourself and use that function. Let's have a look at Filtronic, because I can hear producer Phil in my ear saying that someone has called for this. Caught short. Nice handle. Filtronic, you hear me talk about this quite a bit with Luke Moore. I do like this chart. It's got that nice base that's formed at around 116, which Axel will be very pleased that I'm using these words, which really respects inverse polarity here.
Yes, it's one of Axel's favourite phrases. I've never really seen it used before, and then he uses it all the time. But the share price has gone from 17p to 150 in the space of just over 2 years. Defence most, isn't it? Filtronic. So got the magic words in there. If you don't want to touch tech, you've got defence instead. So absolutely storming performance. And there you go, is your surge to record highs. So it's like the weekly chart, and then it spent weeks and weeks coming down and then consolidating. It obviously did find a low eventually, and it's now started to look more constructive once again. So it has been a tough dip, this one, because it's been so drawn out. You've a couple of false storms. You'd probably be forgiven for jumping in early a couple of times here, but it now seems to be following through on that one. And as you say, holding above all the averages on the weekly charts, always very positive. Trading at 23 times earnings, so it's not exactly cheap, but
Client sentiment, let's have a look at that.
not as we said, not a massively popular stock, as we said. So
One that is popular, though, is Saga, if you want to get that up.
it is what?
Saga.
Oh, Saga, yes, of course.
Right, Saga is very popular. Andrew McKilvey has got Saga. Rich is, of course, a subscriber.
Yeah, he must be on the holidays regularly.
Saga has been very much on a tear. This is the daily chart there. One that I really like because, as you can see, price action is very healthy, looking very healthy.
Very nice, very nice. Not
Yes.
too. Not when you get a pullback. We've probably said this before. It doesn't really test too many of the moving averages. So very healthy demand, evidently. In the
One really interesting thing about Saga is it was looking to expand its offering to a more diverse age group. Did you hear about this?
Oh, really?
Yeah.
It used to stand for something, didn't it? Saga.
I can't remember, but Jerry, he used to be here. I think his brother-in-law or someone in his family worked in Saga. But it has been very often the FTSE small cap gainer, biggest gainer. And in travel, they have a very strong foothold in the older client segment. And On the Beach, this comes as On the Beach has reported a rise in second half forward bookings.
Good. Selling themselves with those numbers. Saga, the second best performer on the small cap index this year, 179.4%, just pipped by Secure Trust Bank at 181.8%.
The only question I would ask is, and this is to Andrew as well, who's very knowledgeable in this area, is has the recent Rachel Reeves shockwaves meant that people are going to be more cautious when booking their holidays and travel insurance going forward? We've certainly seen a lot of changes in the area that I live in, and also if you're concerned that your house prices are suddenly capped, will that actually change your plans?
Spaceship parts.
Oh yes, yeah,
Filtronic, not for Saga.
Not for
Saga. Saga announced its decision to branch out into spaceship parts.
Thank you, Laurie.
Maybe they'll SpaceX and partner for old age pensioner cruises to space.
Off to Mars for your 50th,
not make it
60th
back,
anniversary. You might not make it back. We'll give you a cheaper one way only.
Oh, there's the
Oh
photo.
my goodness me! Was he at
Speaking of not making it back.
Yeah, speaking of not making it back, what was he at the helm?
Yes.
Oh my goodness!
So infer what you like from his trading from that.
What I want to know is, what that person at the back is thinking. Phil just said something in my ear that I can't say. Let's have a look at the chat there. Maybe he needed some spaceship parts for the car after that. Speaking of spaceship and all things, related to the sky, but BAE Systems, have you covered that yet? BAE Systems.
No, not at all. No.
Because BAE Systems down 1.5% there. RSAX, if you are still in BAE Systems, that's down because of the weaker European defence sector. As I said time and time again, wait for commitment in the coming year. All the money allocated for this year has been spent. So unless we have any sudden change in hostilities over the next few weeks, that is the status quo at the moment. And you're seeing that play out across the defence space. Of course, if you're trading 2030 rearmament story, like Joachim Clement has been talking about, that is longer term duration. You're a very smart dressed man. Any Burberry products on you?
No, good Lord, no.
Burberry also, did you say good Lord, no?
Never a fan.
Luke Moore loves a bit of luxury.
Last one, this is of course
Burberry.
Ronnie's favourite.
It is Ronnie's favourite as well. Burberry, top gainer on the FTSE. They're up almost 3% following Kering higher because Kering was storming earlier on. And also TT Electronics, that's quite a small one, but a very big mover if you caught that earlier today.
Is it dropping or? Yeah, there you go, the next one down 20%. Yeah, because the company, the firm that was bidding for it isn't bidding for it now. So there's almost the entire reversal of that move.
There we go.
You get motion sickness the way you zoom in and out of those charts sometimes.
I'm trying to show you the bounce and also the reversal.
So there you go.
Heartbroken after the
TT Electronics unplugged. There we go.
Right, on that note, we're going to get Axel unplugged for you and plugged in here. Laurie Angel, they're saying cruises for the wealthy. To Mars, one way only. On that note, thank you so much, Chris.
Thank you.
And we will see you on the floor. All of you, any questions, anything you'd like to chat about, please do ask on ask@ig.com. Don't forget, we got Julian Wheeler on with me tomorrow. For those of you that caught Alcoa when he made that call, well done you.
Welcome to The Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello and welcome to this, the last trade of the week of 2025. And what I will do this week is not to come up with a trade idea, because it's a good time of the year to just take things easy, stop trading, think about what you've done during the year and try to improve things for next year. So let's look at our stats. As you know, if you watched last week's trade of the week, we made over 20% by risking 2% of capital per trade. And I'll explain to you what that actually means in a minute. But if you look at the graphs, you can see here that over the last 7 years, trade of the week on average has made a return of plus 19%, risking just 2% of capital per trade. So you can consistently make really good returns. You can see here the last 3 years since 2023 is down to mainly me, up about 25%. And as I said, we were up 20% this year. So let's just look at the numbers. You can see what we do is for every trade of the week, we write down all of these trades, and we will actually zoom in now so I can show you what I'm actually doing here. So we put the date down, and you should have a trading plan as well and write things down, because that way you can analyze what you've actually done, where you went right, where you went wrong, and so forth. So you have your date, then the direction of your trade. Is it long? Are you buying? Is it short? Are you selling? And then the asset. In this case, it was Tesla in January, or in February, for example, euro dollar. Let's just go back to the Tesla one. Your entry level, and then straight away you decide where your stop loss is, your exit in case of things going wrong. Because this distance here, you can write that down there, this distance will determine your trading size. Why? Because if you have £10,000 available to you, that's our fictitious account, we will risk 2% of that. 2% of £10,000 is £200. If you then add the spread, here we added 0.01% for the spread, that means you can lose £201, which we did lose on Tesla. We got this trade wrong. But what I'm basically doing is I'm taking the distance, the stop loss distance, divided by my risk, my £200, and that gives me my trading size. In this case, I could have traded 5 pence per point on the Tesla spread bet. In case of euro dollar, let's look at this one here. You can see that the risk is 151 ticks between the entry level on the daily financial bet at 10,326 and the stop loss level at 10,175. So I'm taking not 200 this time around, but what I'm actually doing, I'm taking 2% of wherever my capital is. And you can see at the beginning of the year, I had 4 losing trades in a row. And now the deposit basically that we have, the money available, is down to £9,377. So I'm taking 2% of this sum. And what I basically do then is take this sum divided by 151, and that gives me the risk I can take per point. So here for a euro dollar, where I wanted to go long, I could have risked £1.24 on this trade. So you can see how you determine your trading size by your risk, and your risk is always 2% of whatever capital you have available to you. And what you then also look at is your reward to risk ratio. You want this number to be positive, and you will see here most of the time it is positive. So what I'm saying here, for example, for Tesla, had I been right, I would have made 1.88 times more than when I was wrong. Or for euro dollar, I would have made 2.81 times more than I'm wrong. And basically, this is what makes you profitable trades, because you can see here, every time we're wrong, the red ones here, we lose £200 or so. Obviously, when the trading becomes bigger, when the size here, we had £13,000 available, our 2% risk was then £267 or £261. So it was bigger because we had a bigger amount of capital available to us. But you can see that on the right-hand side here, the profits are bigger than the losses. £767 profit, 500, 600, and so forth. And this is what it is all about. And if you look at the stats, let me just find the right chart very quickly. Sorry. Actually, I had a chart. Oh, yes, I know where I put it. I prepared this one for you. Here we go. Sorry. So when you actually look at the graph of the P&L, you can see that the winners are greater than the losers, and the losers are always more or less the same amount. So we're keeping our losses small and we're letting our profits run. And this is how you can consistently make money, even if you're only right half of the time, or in my case for last year, 2025, 46% of the time. So I was wrong more often than right, but we made more average profits, bigger average profits than we had average losses. And this is what investing and trading is all about. Thanks for watching Trade of the Week, and I hope to see you again for another profitable year in 2026. Hello and welcome to Technically Speaking. I've just got a question on margins to do with the Trade of the Week. And the question is, are you using the whole £10,000 each time and only ever having one trade on at a time? So 2 things with Trade of the Week. 3 things, actually. First of all, I don't trade any and have never traded any of these setups. Why? Because basically, to be quite honest with you, I've got better ones, because I don't trade in a way where every Monday morning at 8:30 when I do this live show, I come up with a trade idea. This is not how trading works. You need to wait for the right opportunity. It's not every day at a certain specific time that you're going to pick the best trade setup. It doesn't work like that. But I have to come up with something, don't I? So I come up with an idea, and yes, I will then risk 2% of whatever capital we have available. At the beginning, we have 10,000 available. Then when it grows, obviously, the account grows and the risk grows. When it reduces, the risk becomes smaller. So that's the first thing. Second thing is, in real life, for example, along S&P or NASDAQ, which we did at the beginning of last year in January, I would have kept those for the whole of the year. But if I just do that, it's a boring trade of the week show, so nobody's going to watch it. So I have to come up with a new one every week, and it's not always ideal. And obviously, if I did indices one week, if I do indices again the next week, it's the same trade, just on another market. So I'm switching things around to make it interesting. But again, this is not how trading works. You want the odds in your favor. Yes, you may want to diversify, but if you have some good trades on, especially with equities, you would tend to keep those. We can maybe do that next year and look at that. And the third point is basically with regards to margins. Some equities, for example, at the beginning of this year in 2025, I couldn't have traded because of margins, and the trading size was hypothetically too big. So I adjusted things there. But it really depends on your account size. Some clients have millions in their accounts. Other clients have £1,000 in their accounts. So now that you can trade down to 1 pence, I believe, on quite a few assets, you can really reduce the size. And the mistake not to make, and a lot of people do this, is to risk, for example, 10% of your available capital to you on a given trade, because I can show you that over time you will go bust. Mathematically, it's a near certainty that you will go bust. And some people are lucky; they get 5 trades right in a row, and thereby they are up 50%. If they risk 10%, great. But all you need is a few ones that go wrong, and you lose everything. So don't forget, if you have 5 trades wrong in a row and you risk 10%, you've lost half of your money. You now need to make 100% gains just to get back to break even. If you want to learn more about trading and investing and all of these things, I do regular webinars for IG clients, and I for hours teach about these things and how to do that. So we can talk about that some other time. But let's go and look at some shares, and let's look at BMW. And analyze what we can do here. Bayerische Motorenwerke make very nice cars, and the share price is reflecting that. I mean, BMW is doing quite well, as you can see here. We're heading higher again. We formed this nice bottoming formation here, but let's actually go to the longer term chart, because I haven't looked at it for a while. Yes, that's what I thought. So you can see BMW had a record high back in, I believe it was 2015, so a long time ago. And then with the whole switch into EV, it basically lost a lot of market share to Tesla with regards to those cars. But now it's catching up, and I think, and that's my personal opinion, that more and more car manufacturers, now that they've started to produce reliable electric vehicles, will actually regain market share with regards to Tesla. Why? Because a lot of people tend to be very, especially for German cars, how shall I put it? They tend to buy the same make. So basically, they trust a brand, and they will always buy the same one. So, for example, if somebody buys BMW, they're not going to switch to Mercedes. So they tend to buy BMW. Same with Porsche, same with Mercedes. And now that they're producing electric vehicles, they're just switching to electric vehicles from the ones we used before. So I do believe that that's going to change in the future. Maybe I'll be wrong. We'll see. But if we look at the BMW share price, we can see that we tried to retest that high from 2015 in 2023 and again in 2024, but failed to do so. What we're seeing, though, this year is a clear bottoming formation. Here you can see we had this hammer low in March of this year, and then what we did is we finally managed in July to close on a monthly closing basis above this February candle high. That's positive. Then we had consolidation, and now we're breaking higher again. So BMW definitely looking bullish. On the weekly chart as well, you can see this nice long candle in December taking us above that high from August. That's also bullish. And I would expect BMW to head above 10,000 on the daily financial bet, which is not far off. And you can see here, it is still looking very nice and bullish. We have a series of higher highs, higher lows. If you're a short-term trader, your low stop loss, if you're long, would probably be the low from Wednesday of last week, because that's a hammer formation. You don't want to fall through here. But even if we were to do that from a medium-term perspective, you've now got, can you see here, all of these highs as really good support going back to August of this year. So even if we were to retrace lower, I think there's a lot of good support here between, let's say, 9,150 and 9,000 here for the BMW share price. So in my opinion, further upside more likely than any downside. Now I've got another question to do with Greggs. Let me have a look at Greggs, a UK company, as we all know. Is it about to breach an ADX of 14 to the downside? So that's the oscillator. I'm not going to put it on there here, but or potential volatile due to trading announcement. Well, a trading announcement obviously can change things and do quite often change things, and volatility is likely to increase. And you can also see that if you were to put on Bollinger Bands. Let's just do that instead of the ADX, because the ADX is showing you whether it's trending or not. But what the Bollinger Bands are doing is actually showing you whether you have tightening bands or not. And you can see here, actually, the bands did tighten around this period, but they're quite wide at the moment. So it's not like here where they tightened and then you had a big move. So maybe Bollinger Bands are not that interesting. So we might not get a big high volatility breakout here based on these. Let me just see what else we can see. Well, we're just consolidating. ADX, I mean, we can put the ADX on if you want me to, but where is it? I cannot find it. Why is it not up here? Okay, not to worry. But anyway, ADX is backward looking. It's an oscillator which reflects the price action. So yes, it can tell you whether the market's trending or not, but you can also see that on the chart itself, to be quite frank with you. Or, you know, I do anyway, sorry, but you can see here we trended down, then we had an uptrend. Now we're losing upside momentum on this uptrend. What we're also seeing is negative divergence here with regards to these highs. The 5th of December high was higher than the one made on the 2nd of December. Yet if you look at the relative strength index here, you had a lower high. That was telling you that we were probably likely to consolidate or reverse. We are now consolidating. So the question is, what's going to happen next? Well, if you look at the longer term picture for Greggs, we are in this sideways trading range and have been since August of this year. Yes, we broke out of that sideways trading range back in November, made a low, but since then we've recovered and we're back in the middle of the sideways trading range. So the question is, from a medium term perspective, even if there's volatility around a trading announcement, can we break above the high seen on the 9th of October at 1,729 on the daily financial bet? If so, that would be, in my opinion, bullish, because what we've then seen is a lower low here and then basically a bottoming formation, and then we're heading back up again towards 2,000 or even higher. So that's one view. If it were to fall, well, it's pretty likely that we may find support between these lows here, between the July low and the low from September. That was made at 1,508. But these are probably only in view if we fall through the last relative low, which is the 4th of December low at 1,575. So as long as we're above there, we're just trading sideways. And as long as we are, you know, below the 1,723 low high from the 24th of October. So just sideways trading range. So I'm not anticipating what Greggs is going to do. I'm just analyzing where the levels are, where support is, where resistance is, and then I'm getting ready for a potential breakout. And also, if we were to head higher, we would probably take out this resistance line. A break above here and a rise above the last reaction high would be bullish, but because this one is slightly lower than these two here, I would look for the breakout, as I said before, at 1,729, the 9th of October high as my reference point. If I close above there on a daily chart closing basis, it is bullish. If I fall through the 4th of December low, it is probably in the short term bearish. That's how I would look at this. IAG, the owners of British Airways, International Consolidated Airlines. Let's just have a look at this one. This is also bullish, if I remember. Yes, it is. And you can see here, we are clearly in a very nicely defined uptrend. And we did have a scare and did come down with this very sharp candle. That was really negative, and then we tried to retest that. And quite often, you know, the halfway point of a candle is a good selling point here, because it's quite rare that you get a full reversal to the upside unless it's a high volatile environment. But here you had another selling point, then it went down, retested low, but held at that low, retested that high and held at that resistance, came off again. But now, what has changed? we managed to rise and close on Friday above these two last reaction highs. That is bullish. Also, the fact that we've got this big candle here followed by another big one is pointing higher. So I wouldn't be surprised if IAG has now resumed its long-term uptrend and is heading towards its high seen in November at 429 in the short term. So medium term, I'm still bullish as long as we stay above these lows from November. So I believe 366.5. No, 366.2 from the 10th of November low. So as long as we stay above there, this trend remains valid, and we are probably heading higher still. Now I've got another request for this one here. I don't know what this one is. Okay, MLG Oz Limited. I guess that's the one you wanted to look at, Andrew McKelvey. If not, let me know. So what's this one doing? Well, you can see here, I left the Bollinger Bands on. We have tight Bollinger Bands, so we're just trading sideways. The Bollinger Bands are telling us that the volatility is out of this stock here at the moment. But where are the reference points? Well, where's our last reaction high? That's the high seen from the 19th of November at 94 on the daily financial bet. Where's the low? That low here, which retested the low from earlier in the month. And this low from the 8th of December was made at 80.5. So we're just trading between 80.5 and 94 sideways. What's the longer term time frame? Where we were in an uptrend here pointing upwards, then we had a correction against the trend. Now we're trading sideways. So basically, this upward move is more important than the shorter one down move, because that seems to be the overwhelming trend. And therefore, basically, so we haven't, it's a relatively new one. We haven't got much data on there. So basically, we're still bullish. So in that case, if you're long from further down, stay long, have your stop loss below these lows here, below 80.5, and see whether we can take out the last reaction high now that we've broken through this downtrend line here, 3 touching points, and we closed above it on Wednesday. So that's bullish, but I want confirmation by us taking out this high from the 19th of November at 94. So a rise above there would most likely put this high here back on the map around 107, going back to middle of October of this year. So that's my view on this one here. Barclays, of course I have time for Barclays. And let me just have a look at that one, also bullish. You can see here doing very well indeed. A nice up move. And basically Barclays is in an uptrend, series of higher highs, higher lows. Every time it goes down, it has another up leg. Let's just see how much higher we can go. You can see a nice reversal here. Again, can you see how reversals quite often happen when you've got this final kick to the downside, stopping everybody out, people getting frustrated, and then you slowly turn. And then once you take out these previous highs, that's when the trend reversal happens. And actually, if you have something like this happening here, where you have a retest of these previous highs, and we had that on April, in April with Trump, then that's a very positive sign once you take out the hammer to the upside. So here, we're now trading at levels last seen in September of 2008. And the next upside target for Barclays is 475, and then the 500 mark. So Barclays clearly bullish. It's currently on track for its 4th consecutive month of gains. And if you're a short-term trader, basically your stop loss is probably, if you've been long here for the last, let's say, 2 or 3 weeks, probably above the 21st of November low. If you're a medium-term investor, your stop loss is probably, if you're long, above the 29th of August low here at 352.93, because these are the reaction lows here, which are important. But yeah, clearly in an uptrend, Barclays, clearly heading towards 500. Looking bullish indeed. Meta, yes, Meta is also an interesting one. Let's just look at Meta. So let me just put that one in. We can see that the 24-hour chart here is struggling a bit, isn't it? So what we saw with regards to the Meta share price is us falling through these reaction lows here all the way back to July of this year. And we had a very sharp candle to the downside and another big move down. And that basically negated the uptrend. And what is interesting is that since we bounced off this uptrend line here at the end of November, we went back to this resistance area here and failed at that previous resistance. So that's why you look at these previous lows, which then in the future become a resistance area. Now we've come off that and heading down again. So what are we seeing on the chart, irrespective of the fundamentals? Well, basically, since August of this year, we're seeing a series of lower highs and lower lows. That's the definition of a downtrend. This may just be a correction in a downtrend. So from a short-term perspective, as long as we stay below the 4th of December high at 68,686.5 on the daily financial bet, we are still in a downtrend. If we were to fall through the low seen from Wednesday from last week, we are likely to fall back towards this low here from the 23rd of May, and that's around 61,857. So yeah, for me, Meta is struggling a bit and it's not looking constructive unless we take out that high from the 4th of December. If you're a longer term investor, then you could either have a stop loss below the November low, or if you're really longer term, it probably, you can actually put it all the way below the April low, but that's a long way away. But yes, Meta, like a lot of these tech stocks, is coming off a bit as the froth of this very, very expensive technology sector is coming off a bit as investors are rotating out of tech into other markets, which is why last week the S&P 500 and the Dow have made new record highs whilst the Nasdaq didn't. So that's what's going on there. DB, I don't know what do you mean, Deutsche Bank or oh no, is that just your name? Okay, sorry. BTC Bitcoin, yeah. Let's just have a look at Bitcoin. That is an interesting one too, because again, we did see a recovery in some of these tech stocks over the last few weeks, but we haven't really in any of the cryptocurrencies. So what's going on here? Well, there's a bit of fatigue, and apparently above, I think 78% of, it might be more now, of investors in cryptocurrency in the top 5 are underwater. So they bought at higher levels. So they're struggling. What we saw is a flash out of those who bought on margin. That was sort of in this period here into the middle of November. But since then, there hasn't been that much institutional inflow. ETF inflows were okay-ish, but then you saw some outflows again. And basically, we were just trading sideways. We're trading water. We're waiting for a new signal to get us interested in cryptocurrencies again. So what I'm saying is that technically speaking, since October, we remain in a downtrend. And since the low we saw on the 21st of November, we are on a sideways trend. You can see that here. If things were to change, what would need to change for us to be bullish again on Bitcoin and on a lot of other cryptocurrencies? The chart looks quite similar, but basically what we need to see is a breakthrough. Oh, by the way, is this trend line correct? No, it's not. Look, I've made a mistake here. Can you see these highs here going through the trend line? When that is the case, your trend line is incorrectly drawn. So what you need to do then is redraw it without any data going through it. So this one here would be correct. So you take this point here as a starting point, not that one, because you don't want these points to go through them. So that's your downtrend line, your resistance line. What I want to see is a break above that downtrend line and the last reaction high. Where is that? That's 94,606 on the daily financial bet, the 9th of December high. That needs to be taken out on the daily chart closing basis. In that case, we have a trend line break and a break above the last relative high, which is also a break above the high seen on the 3rd of December. And that would then probably take us back towards the 100,000 mark. But we've got a lot of resistance here. I mean, if I go back and zoom out, can you see all of these lows here? June and also early June and May. I mean, they're sort of between 97,000 and also the low here in the middle of October, 97,000 to 103,500. Those are big resistance levels going forward. So even if Bitcoin were to head back towards $100,000, it would probably struggle in that area in the short term. Now, what happens if we continue to slide? We may see it happening over Christmas, over the festive period. Why? Because volumes are decreasing, people are taking time off, and you can see higher volatility moves if less people are driving any market really, not just cryptocurrencies, to the upside or downside. So here, if we were to see a fall through the low we saw on Sunday, and that for Bitcoin is around 87,567. It's pretty likely that we may retest the 1st of December low at around 83,823. But the big one, the important one for the longer term uptrend, is this 80,646 low from the 21st of November. And that, by the way, is a low which is really important on a lot of shares as well. So look out for the 21st of November low, also for the indices. If we fall through these, we may be topping out more. As long as this low from the 21st of November holds on all of these asset classes, we may gradually come back and perhaps at the beginning of next year look more bullish again, but we'll have to see. But as I say, maybe now's a time where it's a good idea to at least look at what went well this year, to reflect at what didn't go so well this year, what lessons you've learned, and what you can improve next year. Build a trading plan, see where you went wrong psychologically. Did you follow your rules? Didn't you? Did you try to move stops away? Did you not use stops? Things like that you shouldn't do. Basically focus on improving things for next year, but also take a break because you want to come back refreshed. And on that note, I wish you all the best for the festive season and a happy new year. And I look forward to seeing you again next year.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. Welcome back. It is Garth McKenzie joining us for Expert Edge. How are you, Garth?
Hello, Rich. It's great to be back with you.
Now,
All good?
tell me, how have things been since we last talked? That mining trust is absolutely going gangbusters, isn't it?
It is. That was the BlackRock World Mining Trust, which is doing very well. I'm glad we talked about it. It broke out. It's doing all the right things. And that still seems to be a sector that is running nicely and happily long and happy to stay long there, quite honestly.
God, that was just a beautiful thing, wasn't it? Literally.
It is.
I bought it at 7:14. So that's here. That's when we last spoke on the 2nd of December.
Yes. I mean, that is the type of chart that they could make a textbook inverse head and shoulders explanation from, if you look at that, in terms of it being a continuation pattern. That you've got perfectly two shoulders and a head in the middle there. You can see what I'm talking about, I think. And that breakout was absolutely textbook, and it's just kept going. And this is a proper, it's a strong sector of the market. Mining is doing well. All the commodities prices are pushing higher. We've got gold pushing higher. We've got platinum. Silver is absolutely going gangbusters. But outside of that, copper is strong. Aluminium is going well. So all of that plays into the hands of these mining companies. And as a consequence, we've seen this nice leg up. I mean, it looks a bit stretched now. I'd be wary of chasing it at this level. But, if it makes a nice, healthy consolidation from this point, it probably would line up another entry point somewhere down the line. And at that point, I might even consider adding to the position that I've already got on, depending on how the technicals look at that stage. But I mean, this to me just looks superb. It's a great chart.
And I wonder if this is lining us up for 2026 then, more focused on potential inflation plays, shortage of supply. I didn't realize that over 70% of silver supply comes from byproducts of mining other things like lithium and copper and.
Yeah, it does. But I think to your original question around inflation and commodities, I think that is something that we are very much considering as a theme for next year. With the Fed cutting interest rates, which was widely expected last week, but they're expected to cut another 2 times, but possibly another 3 times in 2026. And in addition to that, they're pumping liquidity into the system now, purchasing $40 billion a month of treasuries. So
do you
all
call
of that
QE, Garth?
Well, do you or don't you? Because I've seen commentators saying it's not QE, but I mean, it is really, isn't it? I don't know.
Yeah, they're buying bonds.
They're buying bonds. So where does QE start and stop? I mean, I've seen some commentators saying no, because they're only buying at the short end of the curve. That's not QE. It would be QE if they're buying the long end of the curve. Well, all right. I mean, I think we're splitting hairs. The point is, they're injecting liquidity into the system, in essence, $40 billion a month, and that liquidity's got to find a home. And it probably, in addition to the lower interest rates, it could be inflationary. So, and that's why I think you're starting to see some of these inflation type trades heating up, like the commodity prices. And I mean, we've known that gold and platinum, all that's been running. Those are your precious metals. But outside of that, things like copper and aluminium, etc., and other commodities further down the chain are moving higher as well. Those are your inflation plays. And if we believe that inflation could tick a bit higher next year, which I think it will. I think it's a question of how much. Does it go a little bit higher? Does it go a lot higher? There are some scary charts doing the rounds that track the analog of 1970s inflation cycles and show how closely we are tracking the 1970s. Now, I'm always wary of analogs because they follow probably to the point when everybody starts noticing that they're tracking each other, and then it suddenly goes awry. But in any case, the analog is saying we are coming into a second wave of inflation. And I guess the question is just how aggressive is that second wave going to be? Is it going to be a super wave like we saw in the 1970s, which is somewhat doubtful? But even if it just ticks a bit higher, if it ticks up to 4%, that's a lot higher than where the Fed wants it. And I think that's why you're getting moves higher in these inflation type trade setups.
I see it as almost a double risk or a double benefit, because if AI works and we get it feeding into your 70% of companies around the world that can actually use it, then you can sack 10% of your workforce, which means that your margins expand and companies don't have to put up prices. So then your unemployment rate goes higher, but inflation doesn't go higher, and you're sitting with better profits in the corporate world and lower interest rates and no inflation. So you're kind of at that Goldilocks point. That's one outcome I see for 2026, but I'm not sure if it's H1 26. I almost think that we could get all the bad news out in a sort of mini recession in H1, and then H2 we start to see the benefits of AI coming through.
Yeah, I think that's probably fair. And that type of cycle might even take longer to play out than what you're saying in terms of the H1, H2. If you look at the way these sort of hype cycles play out historically, I think what you're suggesting is probably right, but you may find that initial drop off from where the hype of AI dissipates for a while could perhaps draw out a bit longer than just the first half of next year. And yeah, but look, we'll see. You and I are just talking and speculating here. The reality is, I don't know, you don't know, nobody really knows.
Exactly.
We're just throwing ideas around. When it comes to trading the markets, I think it's useful to keep these sort of bigger picture ideas in mind. But the further out you go, the more difficult it is to forecast these things. So I'm kind of, when it comes to trading, I'm far more interested in the shorter term trading action that I'm seeing in the market and trying to trade that short term action as opposed to trying to predict what I think the market's going to do in the future.
Well, if you look at the S&P recently, you could be forgiven to think there's no action, because the S&P is trading to the point exactly where it was on the 1st of December at midnight. But that just really doesn't tell the story of what's going on underneath the hood, does it?
No, it really doesn't. I mean, there's been quite a lot of sector rotation and movement within the sectors below this S&P 500. And that's why it's always important to remember it's a market of stocks as much as it is a stock market. And when you go below the surface, you start to see that some of those really hot areas of the market have begun to see a little bit of profit taking, like semiconductors, for example. But then against that, you've seen some quite nice moves higher in other sectors, like healthcare has been picking up, financials have been picking up. And you've got to scratch below the surface to see where the action has been. But you're right, at an overall index level, the S&P 500 has been pretty trendless for the last number of weeks and seems to remain trendless. I mean, just last week we were looking at a potential breakout above 6,900 there, and I thought, okay, this is it. Now we're going to get the year-end rally. And no sooner did that happen and the market failed and came sharply lower on Friday, as you can see on the right-hand side of that chart. And that was after Broadcom numbers came in a bit lighter than what the market was looking for. And we suddenly saw the S&P trading all the way back down to 6,800. And we're back inside that sideways range at the moment. So it's not been a fun market if you're a trend trader at an index level over the last couple of weeks. And I think you've got to be careful in this kind of an environment of drawdowns. I've seen a lot of, myself included, a lot of other traders who I follow, who are typically trend traders, have been enduring shallow drawdowns over the last couple of weeks.
God, they've had to do some work for once and not just follow the same pattern on a picture.
Exactly. You know, the trend is your friend until the bend at the end. The thing is, we haven't had a bend. We haven't had a bend in the trend, but we've certainly seen that the momentum stopped, and it's been going sideways on the S&P 500 for the last couple of weeks. And that is a difficult market to trade because it can, exactly as I said, it can lead to drawdowns. And that's where you really need to be on top of your risk management, managing your stop losses, managing your position sizes, and listening to the action and saying, all right, so if my trend trading or trend following methodology is not serving me well, you know, scale it back a bit, and just keep capital preservation as your number one priority.
Garth, we've got a great question from Aaron Simpson saying, we talked about the ARC. Was it Biotech Fund? What was the name of the ARC fund we looked at?
Yes, that's right. It's the ARC Genomic Revolution ETF. That's ARKG is the code.
There we go.
And it's been doing quite nicely. I'm just going to bring it up on my screen while you get yours up there,
great.
Rich. And then we can talk about it. Yeah, I mean, there you go. You can see it when we met the last time, it was making that pullback. And it came lower, found a bit of support down there at about, what was it, about $27, I think, thereabouts. Yeah. And it made a quite a nice falling wedge structure and broke out to the upside. That to me is a nice looking setup. I think biotech is one of those areas that has been showing some signs of life, and it looks good. And that, if you zoom out even further, and you go out much further actually, you'll see that this has been basing for quite some time, but it's looking as if it's starting to turn up out of the right hand side of the base over there. And I think just from a high level perspective, these genomic stocks of gene editing, it's a future theme, right? But it had that major hype in 2020, 2021. Everyone was super excited about it. And then we've had the trough of disillusionment, which is what we're in and have been in for a while now. But out of the trough of disillusionment usually comes the real story that everybody was initially excited about. Yeah. And I think that's where you've had your various players in the industry that have been absorbed. There's been consolidation in the industry. The weak players might have gone out of business or bankrupt, and the stronger players begin to emerge. And that's probably where we're starting to get to that point in terms of this genomic revolution. And that's why I'm quite excited about this ETF looking out over the next year or two or three, because I think the original growth story that everyone was so super excited about in 2020 and 2021 is now actually the rubber's going to start to meet the road. And it looks exciting. It looks like it's now going to start building out of that base. And for that reason, I've taken a position in this. I'm on the right side of it so far, but it's one of these things. I'll continue to monitor it. And if it continues to trade well and continues to look like it's constructive as it builds out of that base, I'll add to that position and make it a bit bigger over time. But I think we could be in the early innings of a nice recovery in this ETF.
Nice. Now the opposite end of the scale is probably Nvidia, isn't it? It's right up there for $4.4 trillion. Is that sustainable, or are you concerned about the downside in Nvidia?
I think the same as when we spoke the previous time. I said that the key level there was $180 per share on Nvidia, and if it breaks down below $180, then it doesn't really have a great look. I think if you go in slightly shorter term, maybe go to a daily chart on Nvidia, and then let's have a look at the trading action over the last sort of 3 to 4 months, I think, then you'll see what I'm talking about. There is a bit of a crude head and shoulders pattern evident over there with your neckline at around about $180 a share. So I think while it's under 180, that to me is not a great look. And from a fundamental perspective, I do think it's quite full. Valuation wise, it's not like nosebleed expensive, but it's not cheap either. And I think the thing about Nvidia is it's kind of become a profit margin story, I think. Can they sustain these very, very wide profit margins that they have in the business? They're at something like 60%. It's phenomenally profitable business. Don't get me wrong. But the thing is, the market is always forward looking. And it might be looking at this and saying, right, amazing business, top of their game, but is this perhaps as good as it gets? And are we in future going to face a situation where more competition comes? Perhaps their profit margins need to narrow slightly in that sort of environment. And does the share price warrant the future outlook where it is currently? So yeah, I'd be cautious to say that I'm bearish on Nvidia, because as we know, the trading floor is littered with the dead bodies of bears who've tried to short this on the way up. But I do also look at it and I think, well, it's probably quite mature at this level, and I'd just be a bit careful, I guess. If I'm in it, which I'm not, but if I was, I'd probably be tightening up stop losses and maybe lightening it a bit, just given the fact that trading action is not brilliant. It's looking toppish. And remember what we saw after Nvidia's earnings recently. They came out with fantastic earnings, and yet the share price fell sharply. And that's information not to be ignored. That's the market telling you, fine, great numbers, but what about the future? Is the future going to be as good as this?
Do you not just continue to sell calls on this? It's just take the money. It's not going above $5 trillion. Just sell calls every couple of months. Happy days. That's your income.
Yeah, you could. I think one's always got to be wary of selling options naked.
I mean, it's been fantastic for the last 6 months here.
Yeah, it has. And it can be a profitable strategy. The thing is, I do often think of selling options, and it can be a bit like playing Russian roulette, because you collect that little bit of premium when it works.
Well, but on something like Nvidia, it's not little bit, right? You're taking in 5%.
Yeah. Well, it depends how close to the money your strike is. I mean, what sort of strike levels are you looking to sell Nvidia, and over what time frame?
Well, I've just been selling the 190s all year.
Right. And how far out from present?
You run it over every couple of months.
Okay. All right. Look, I mean, I think it's a bit like a covered call strategy. I mean, I don't know whether you own the stock. If you own the stock and you wanting to extract a bit of income out of it by selling calls, that's fine. Go right ahead. The risk is that something happens in this share price where it suddenly spike for some reason. And as much as I say, I think it's unlikely, but you just never know. And
You could say that about
it's
any
for-
stock, though, Garth, couldn't you? I mean,
Correct.
At least here you're playing with the law of large numbers. For this thing
Yes.
to go up more than 10%, you're talking about adding $500 billion in market cap. It would either be margin expansion, impossible. You can't expand margins from the level they already are. We've now had the China story, right? And China have said, we're not that interested.
Yeah.
And you're not going to get a sudden sales uplift. It's more likely that you'll actually lose orders as companies develop their own chips or competitors come into the market. So I cannot see for the life of me how this gets beyond $200, which is where your break even is.
Yeah. Listen, I think you're right. I'm not arguing the point. I think you probably are right. And that strategy of selling out the money calls will probably pay you pretty well here, because I think for all the reasons you've cited, it's unlikely to go substantially higher. And it's also not the kind of company that's suddenly going to be an acquisition target. It's just too big. So so you're unlikely to see a spike from that sort of a reason. I think I'm just saying from a principle perspective, you do have to be careful of selling options.
That's an old
naked.
wives' tale, Garth. Come on. Now, one stock that you are very valid in saying don't sell options in this thing, Tesla. Tesla has just defied all logic this year.
Yeah, it has. But if you look at it, that's what is it, a 1 year chart? Or how long are we going? No, that's right. We're going back a good few years there, right? It's actually, the share price of Tesla hasn't really done a great deal if you go back to 2021. And when I say that, I mean, I must caveat, it's done plenty, but I'm talking about it's only now sort of once again close to bumping out against new highs from levels that it was a couple of years back. So for a while we were talking about the Magnificent Seven, but people were saying, should Tesla even be included in the Magnificent Seven, because it's not so magnificent anymore. But right now it actually looks like Tesla's been on the bench as a Magnificent Seven stock, and it's now about to come back on the field with fresh legs. And it looks pretty exciting to me. I think it's right on the cusp of breaking out to new highs now. The area is about $460 a share. But if it gets out through there, then it looks like it's off to the races. I think this thing could be north of $500 in a flash. So
looks like
I'm long. It does. It looks very good. It looks absolutely superb. From a technical perspective, there's great relative strength evident on that chart, and it's doing very well compared to a number of its peers in the Mag 7. So I think from a relative perspective and from an absolute trading action perspective, this thing looks ripe for a breakout.
The only thing is, could anybody tell me why?
Well, does it matter?
Yes, it bloody matters. Of course it matters. That's the whole point. There's no fundamental reason for this thing to be going higher.
Yeah, but that's the thing, right? Sometimes the market can remain irrational longer than you can remain solvent. So why? Well, let's think about some reasons why. I mean, robo-taxi is coming and it's growing. The humanoid robots are, what's it called? Optimus. That's also supposed to be a theme.
Yeah.
But remember with Tesla, for as long as I can remember, you could have asked that question. Why? Why does it keep going up? It's so expensive. It's outrageously expensive. And those who have betted against it, yeah, well, it's still valid. But the thing is, anything it's one of those situations, I think. It's one of these companies that has grown into its earnings over time, or grown into its price to earnings ratio, shall we say, over time. So at any time in the past, you could have looked at Tesla and said, this thing is so stupidly expensive. There's no ways it can keep going up. And yet it keeps going up. So
is it just an Elon fan club?
Well, it obviously is a cult stock. It is a cult stock. There's no
but
doubt
are you
about
investing in Elon? This is how you invest in Elon. You're not investing in the cars. We know that. That's 100% sure, right? Because then it would be 100, not 460. So what are you investing in, apart from future dreams of robots and automated cars?
Well, I mean, I guess it goes hand in hand. If you're investing in those things, you are investing in Elon because he's the
Well, my point
the
is,
brains.
the news over the weekend is that SpaceX is coming, right? SpaceX will IPO in 2026. That is a better play on Elon, isn't it? So you'll actually get massive sellers of Tesla to go into SpaceX.
You might, but the chart's not telling you that right now, is it? So I want to look at the trading action as I see it and trade what I see. What I see there is a chart that's about to break out. It looks very, very powerful if it breaks out. And I wouldn't want to be on the other side of that trade.
Oh, God,
I'd rather be with it. I'd rather be with it. If it's going to break out, you want to be long. And as with all trading, it is a probabilities game. So we go in with our eyes open in terms of what could go wrong. And what could go wrong, it makes a failed breakout and turns its tail and comes back down. And then you have to execute a stop loss. But that is a problem for another day, right? For now, let's trade what we see. And what we see there is a chart that looks very powerful, and it looks like it's on the cusp of breaking to new highs.
I can't buy something that has no fundamental behind it, is expensive beyond even anybody's wildest dreams, and there's not a reason for a breakout.
But maybe the reason comes later, and it could be one of these things: the robo-taxi, the Optimus robot, or a combination of all of the above. And suddenly you look back in future and say, you know, the market was right.
Oh yeah,
we should have
which
listened.
It always is, yeah.
Yeah.
Okay, time for one more then, Garth. We've got energy, we've got steel, or Mondi. Which one would you like to chat about?
Well, let's talk about Mondi, because I think we've touched on energy and steel in a previous show.
Yeah.
Let's have a quick look at Mondi. There's something interesting going on here, I think. And this is it's a kind of a what if situation. But if you look at the chart, there we go. So you've got it there. This is the chart in London, isn't it? So the thinking around Mondi for me is that, okay, it's been basing. I mean, that's not a pretty chart. It's quite an ugly chart, actually. However, it is basing. There is a bit of a crude inverted head and shoulders pattern at the bottom there. To me, it just looks like it's waiting for a catalyst to break to the upside and have a bit of a squeeze. And I think what that catalyst might be is if there is some sort of a peace agreement in Ukraine.
Right.
And obviously that's a big if. We know that there are talks ongoing. Putin's trying to get what he wants, that Americans are trying to bully Vladimir Zelensky into agreeing to a deal, etc. The reality is, though, it's looking like we are edging closer to some sort of a peace agreement in Ukraine. And Mondi they've scaled back a lot of their operations in Russia, so it might not be as valid anymore, but they've got European exposure. And I think just from a pure sentiment perspective, if there is peace in Ukraine and everybody agrees to it, this is the type of stock that could pop higher on an announcement in that respect. So yeah, I've taken a small position in it myself, and I'm just sitting on it. It's not a big position, but it's because I think it's one of these things. We could wake up one Monday morning and they've agreed to some sort of a peace deal, and suddenly the shares are up 10%. And if you're not in it already, the bus is going to leave the station without you. So you almost, you need to be on board in the event that something breaks and some news breaks, and suddenly you get a catalyst which causes this thing to pop higher. So it's something interesting. It's as I say, I'm in there with a small position. It's not going to be life-changing either way, but I think that there's something here, and that trading action is looking okay to me in the short term.
Yeah. And it's exposure to Russia reopening rather than Ukraine? Or do they have operations in Ukraine as well?
No, it's more Russia, but I think it's also just the sentiment around Europe in general would probably be favorable.
Yeah.
and this is the kind of stock that would be a likely beneficiary.
Was this thing in consolidate, like bid talks or something? Was that last year?
No. It was. You're right. It was. They were looking actually to do an acquisition, if I'm not wrong.
They
I
were
think
the
of
acquirer,
International
right.
Paper. They were the acquirer, and I think it was of International Packaging Company, or
Yes.
I mean, I'm talking out of turn because I don't actually remember the exact details, but they were an acquirer of a big multinational packaging business. Last year, there were deals, or there was a deal being talked about with Mondi and some other suitor, which I forget now.
Yeah.
And remember, Mondi, just from a longer term historical perspective, actually came out of Anglo-American. It was unbundled
Of course.
out of a long time ago, but it was part of that massive conglomerate, which was Anglo-American at the time, and it was spun out and separately listed.
Fantastic, Garth. Now, coming up to Christmas time, this is the last time we'll see you this year, Garth. Tell us, what are your plans over the festive period?
It's actually very, very quiet this year. We're home for Christmas. We'll be having Christmas lunch with some friends of ours that are coming over to spend the weekend at ours, and Christmas lunch, but not a very exciting Christmas this year, I'm afraid, Rich. Last year, I had a wonderful time back in South Africa and went to the beach, and I was one of those people on social media putting pictures of beach and swimming and all fun stuff. And this year, not so much. This year.
Don't worry, I'll go and do it for you.
Thanks. Thanks very much. Yeah, this time of the year is tricky, looking back home, seeing all the South Africans having their wonderful holidays in the sun when we sit in the cold and wet.
Absolutely.
Here in London.
Looking at our P&Ls. How is the performance doing? We just heard Axel, double-digit gains for the year on his trade of the week. How's your own year gone? Is it one of the...
I've had a nice year, up to about 25%.
Brilliant.
In dollar terms, which is good. Yeah, so I'm happy with that. It's a bit more than the market, and also it's been done with somewhat less volatility than the market, because I've had options fences around my portfolio, which have helped to soften the blow during April tariff tantrum, for example. So I'm relatively happy with this year's performance.
And a couple of the big winners there, what were the ones that made a difference?
So I mean, I've had a couple of things that drone stocks actually did very well for me this year. So I was involved in a little company called Ondas Holdings,
right,
which is a super interesting business. They actually do anti-drone technology. And if you go and look it up, they do all sorts. So you can imagine like drone wars, where these drones are out there capturing other drones, and you're doing effectively anti-drone technology. So that's been a super performer.
Yeah.
And I got a 5-bagger on that this year, which has been a wonderful story.
God, that's beautiful.
Yeah, I caught it down in the earlier part of the year down there and managed to catch that big rally and exited most of it at around about $9. So that was my biggest winner this year.
That helps the year usually, doesn't it?
You need a few of those, and obviously you always want them to be bigger when you get a big winner like that. But the reality is, you'd be taking too much risk to overexpose. So I had about a 1.5% exposure in my portfolio to that company. But when you get a 5-bagger, that little 5-bagger of 1.5% suddenly becomes 7.5% of your portfolio. And that makes a big difference to your end of year performance. Yeah. And you only need a few of those each year to generate some proper alpha in your portfolio. And yeah, happy to say I caught that, and one or two others as well, which did nicely.
Yeah, I guess what I've said for the past year and a half is I think you get 4 really top ideas a year, and it's just making the most of those, isn't it?
I think that's right. When I look at my trading history over the years, every year the bulk of the performance can be narrowed down to a handful of individual positions, which did very, very well. And then outside of that, you've got a couple of trades that do okay, and then you've got a bunch of losers as well. The real secret to success, though, is to make sure you manage the losers. And just if something's not working for you, cut it. And I've done well with that this year. I've had a number of losing positions, but I've kept them minimal. And when I've seen that they're not doing what they're supposed to be doing, I just get out and look for something else.
Yeah.
And it's a very, very important part of trading is cutting your losers and keeping your losers small. Because if you can get that right, then you set yourself up for the winners to take care of themselves in essence.
Amazing. Garth, thank you very much. And thank you for joining us many times. We must be 8 or 9 times, I think, this year you've come on to give us the wisdom.
Thank you. Well, thanks for the opportunity. I always enjoy chatting to you, Rich. I know we always just share a WhatsApp beforehand with a couple of ideas, and then we just kind of wing it, and it's impromptu. But often that's the best, right? You get the best wisdom, and you put me on the spot sometimes, which I appreciate. Gets me thinking.
Yeah.
But I enjoy it, and I hope we can do more of these next year.
Good stuff. Have a wonderful festive period, and to everybody watching as well, thank you for joining us this morning. A reminder, no show tomorrow morning. So tomorrow morning we get a lay-in because you join us live on air for the non-farm payrolls. 1:28 p.m. we'll be going live on air, myself and Piers, and we'll take you through to the US Open. We'll see you tomorrow. Garth, thanks. Peace.
Thanks.
Stocks shake off Oracle earnings, Broadcom up next. It's Thursday, December 11th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak's in San Francisco. We're here to take you through the next 27 minutes or so as we wind down this trading session. Few earnings reports are due out here as we wind down the day. Costco, Lulu, and of course, Broadcom, AVGO, the important part of the Google flywheel when we think about the competition between Google and OpenAI with respect to their various LLMs. That should be out in just over 10 minutes time. So we'll watch a market reaction that has been proving resilient all day long. A NASDAQ here that's still in the red, but trying to claw its way back from what was more than a 1% loss. Same thing for the S&P 500. S&P is actually flirting with a fresh monthly high here and ever so briefly broke through the November high in the ESZ5 contract here just as the market came to a close. Right now, as we look out on these earnings reports, Ilya, we do see that bonds had a bounce and then faded. Gold and silver, strong days, as for copper, same thing there too. But really, silver, the breadwinner, up more than 5% last time I checked, and seems like we're at 4.66% now. Not too shabby. Energy, on the other hand, the exact opposite. It's like silver took all of natural gas's power because natural gas was slugged to an 8% loss. Copper prices, crude prices down 1.1%. And then over in the currency world, the dollar taking it on the chin the day after the Fed doesn't guide for more rate cuts. Market says doesn't matter. More cuts look like they're slowly being priced in, as Ilya noted today on Futures Power Hour. So while we wait for these Broadcom earnings, Ilya, let's talk a little bit about this resiliency in the market today, because overnight it looked like the bears were getting the upper hand. Today, we've erased all of that. Where does this leave us now? Are we just, the next 50 points hinge on whether or not Broadcom meets the mark?
I mean, it's an interesting thing, right? Because you get this very negative reaction to Oracle, and then you reset. Now, did you reset because the Oracle earnings didn't matter? Or did you reset because now you're waiting for Broadcom? Tough to say. A little bit from column A, a little bit from column B. So we'll have to see here. I mean, this is not the world's most convincing breakout, to say the least. What sort of strikes me here is that the Fed came, the Fed went, markets couldn't make hay of it. They already couldn't make hay of it before there was a concern about Oracle. So they weren't down. They got down overnight, but they couldn't take out their ranges. So this is a very tenuous spot here.